Using audio. Talking. Share screen, invite others. Do I share screen? Hello? Participants 1, is that me? Start video. Ah, how do you put this on you so you can watch the thing as well?
Let me see first. I don't know how to do it.
Like so I can see my charts.
What are you talking about?
Well, I don't know. Is this, am I in this or what? It says there's only one participant.
Ah, yeah. I think it's because the other people are still waiting.
Surely I'm not the first one in. And then what do I do? How do I get to see me script this and that as well?
I don't think you can do that one, not unless if you minimize that one and then minimize the other one. Like this one, ba?
Whoa.
Like that?
Oh shit, that's gonna make it hard to bloody see.
I know.
All right, go back and then I'll ask him when I get there, I think. Did I just cancel? I'll get rid of all our other stuff. Get rid of that other stuff for me. What do if I press that minimizes it, does it?
Mm.
Ah, there I am, am I? Ah.
Then for your face to be shown, you will click that video, but wait, because who knows if
Right, so then maybe I can do this.
I'll just say here this is this.
Okay, thank you. Am I at the right place?
I don't know really when it's clicking it.
Yeah. Scotty Phillips is the host now. Right.
Hey guys.
G'day, buddy. How are you?
Good, man. How are you?
Yeah, I'm a little bit like my first day at school, a bit nervous.
All right. So let's check out what's going on here.
All right.
So we have a Bollinger Band touch on all three timeframes to kick it off. We're not starting until 2 p.m., but this could technically become a setup because 158, the new bar has started. Our setup is three elements. Touch the Bollinger higher close, so we've got element 1 and 2. Now if we get a lower close, we're going to be on like Donkey Kong. So what we're going to do is we've got, if this breaks the low, the setup is off the table. But we've got to prep this order based on the fact that it may not. So
Okay.
if we do take this trade, it'll be the nearest half pip above the high. So the high is 80.2. So the entry point would be 80.5. Our stop loss would be 75. So that would be risky.
How are you picking it up so quick? How are you picking up 80.2? Just by your eye? You putting
okay. All right. Let me show you a trick. Let me just place this order so I get my shit correct.
Yeah, mate. Yep. Take your time. Take your time.
And then I'll just get my shit correct.
Well, we're obviously relaxing. Shit. No bloody shirts on, son.
I didn't even realize I had the, I didn't realize I had the camera. I'm not big on shirts when I'm at home. I'm just
Well, I'm not going to bloody take mine off. I'm a fat bastard. I haven't been in the gym for over a year because I've been trying to get this fucking up and going.
there we go. No one needs to see my gut. All right. So we're risking 5.5 to make 6. I'll explain this in a sec. I just want to make sure. Okay, so where we are, we've got to keep an eye on the time. We're at 1:59:35. In 25 seconds, this order is going to be a go. But I can't place the order before it should happen. I have to place it exactly at the time it happens. So the way I do that is my trading platform has one of those last, are you really sure you want to do this sort of things?
Yep.
So I place the order first. I'm placing it now, and I just won't click.
Right, so you're ready to go now, aren't you?
Yeah, my order is on.
Yeah. So it can fill pretty quick, so that's the only drama, isn't it? That's why you...
Okay. So let's explain how all this worked. So you see these numbers here. They're a big long string of confusing numbers. It'll confuse
Up
the
the
fuck
top
out.
there. Yep.
So the easiest way to not get confused by these numbers is to read only the last 3. So instead of saying 1.19788, just read the last 3 as 788. And instead of saying 788, say 78.8, because that's what it is, 78.8 pips. The high, well, we're in the trade already. So
Good on you, mate. Go. Good luck.
we don't think like that. Okay. So you can see where the stop and where the target is, right?
Right, yep.
Okay. So we don't think this way about go, you good thing. In fact, the most tiring part of being in a trade is any of that bullshit, because you can't control it, and it gives you the illusion of control, and it just really emotionally fatigues you. So when a trade is on, I turn my trading platform off. I don't want to watch it. I hate
Right,
watching
so you're not worried about that, and this is probably one of the questions I'm going to ask. You know, if it came up and hit your Bollinger before it, or moved to another entry up high, are you taking that second entry while you've got another entry already going, or this is it until it's finished?
This is it until, if we get a short trade, we jump out of the long and get into the short, and that's a
Right,
relatively.
you can do that. Okay. Right.
But we don't take two or three longs in a row. So okay, so let me explain what happened here. What we need is 3 things. We need a touch of the Bollinger, then a higher close, which has happened in the same bar. Then we need a lower close without breaking the low of this bar, which we had. At that point, we go and we check. This is the 2-minute. This one here is the 5-minute. This one here is the 10-minute. We go and check, do I have confirming evidence, of which we have 4 different types, which you'll see in the course in here. And the easiest one to understand is Bollinger Touch. So you can see on this bar we have a Bollinger Touch, on this bar we have a Bollinger Touch, on this bar we have a Bollinger Touch. So we keep an eye on the time, and before the bar closed, we wanted to go and place our order, so that the way that we size and place our order is we look at the high of this bar, and you can see up here, the high is 80.2 pips. So the nearest half pip above the H, which is this one, is 80.2. So the nearest half pip is 80.5. And the stop loss, if we look at the L, is 75.1. So the nearest half pip below 75.1 is 75. So our trade is sized from 75 to 80.5, which is 5.5 pips. You could use a calculator if you wanted, but we don't.
I'm going to have
need
to, mate, to be honest.
Yeah. And
well,
so
I've got this thing off, you know Alejandro, old Etienne's mate.
No, I just know Etienne.
Oh, okay. Well, he's given me this position size calculator. It goes on my screen, and it can put a trade on.
I just use this shitty simple little one. Yours will be the same. So I just put in. I'm risking. I'm risking $500 a trade.
Yep.
So my position size is 909, 909,000 K, and then I whack that into my trading platform and I make sure the order's on. Okay. Now there's nothing much to do.
Yes.
We just got to see if we win. So one thing that you're always tempted to do when you're in a trade is jerk off about it mentally, and it's just really fatiguing. Like you're just easier off just accepting that some of them win and some of them lose, and there's, you know, picking apart why ones win and why ones lose kind of fucks with your head. It's not what you want to do.
Well, while we're not interested in this trade, can I? I've just gone through a bit of your course, and
Sure.
I've taken some notes, and I've just got just a couple of questions, but I think you might have answered just briefly with that one. So one of my questions was, hang on a minute.
Welcome to the other guys too. Welcome,
sorry,
Aaron,
Joe.
John, Anthony, Thomas. Good to see you guys. Sorry, keep going, Jase.
Sorry, maybe you want to take over then. I thought we were just on our own.
No. These guys are the Platinum Group. So most of these guys are trading this for real every day, and on Tuesdays we all get together and bullshit about it.
Right. Okay. So, well, the first thing I sort of want to know was when that initial Bollinger touch happens, how many candles after that candle are you prepared to wait until you get a pullback from that third candle?
Okay, up till 20, but as soon as it breaks the low of this candle, you start again. So from here, we started looking, then it broke the low of this. If it broke the low of this, we'd start again, but it can go up to 20 candles, but that's a very rare situation.
Okay.
Most of the time it happens in the first 2 or 3.
And then I just wanted some clarification on that, the 3 pip stop loss that you're talking about because of the money you take.
Let me explain why. So let's say that let's say that we're running a $10,000 account and we're risking 1%, and our stop loss is 2 pips away.
Yep.
We calculate that we're risking $100, and our position size would be $500,000, and on $500,000, you're going to pay roughly $35 in brokerage to put on that trade, and so that extra brokerage is a 0.35 expectancy. That's really difficult to deal with. No one's a good enough trader to overcome that advantage. So what we do is, let's say your trade has a 2 pip risk. So as in, like, the distance between here and here was 2 pips. You would instead size the position for 3 pips.
Right.
You place your stop and your target where they should be. So you're risking 2 pips, but your target is 3 times 1.1 rounded up or down to the nearest half pip, which is 3.3 rounded up to 3.5 pips. So you would be risking 2 pips to make 3.5 pips.
Okay.
Now, even if your win rate drops, if you're risking 2 pips to make 3.5 pips, chances are you've got a good bet. Like, that's just a sensible bet, right?
Okay. All right. Perfect. That's, I think that was it so far, mate. So yeah, thank you.
So just keep an eye on and listen for what the other guys have to say. They're all super knowledgeable. There's a couple of the guys who are like, there's probably 4 or 5 guys who are every bit as good as me. These guys all know what they're doing, right?
Well, I'll listen and I'll watch, and when I catch up with you next week, I'll have some more questions, I'm sure.
Sure. How you going, guys?
Good, boss. How are you?
Yeah, I'm feeling good today. I'm excited about trading, and
haven't been arrested this week?
Not this week. It was a good week. Fucking Thai police. I did the 20 trade rolling expectancy graph again, John's one, and it was really quite interesting. You can see where we are. We're just like, I'd be surprised if we didn't start pulling back here.
Scott, you didn't put the last 3 days of the last week and yesterday on the baseline, I think.
I put some more on today. I'm nearly caught up. So where am I up to now?
Yeah,
I didn't know
because I think the last few days have been a bit of losses.
All right, let me, I can do
So
some
that's why
now.
probably your expectancy will drop down if you had the
Yeah,
last few days.
I would be I would be expecting it. I'm up to Fridays, so I haven't done yesterday's as well. So I would be expecting that. Nothing so good lasts forever. So, and here we are. This is going to be a losing trade. Losing trade.
It feels like since last Tuesday, I thought last Tuesday was a good trading day. And then I thought the next 3 days were pretty, there seemed to be a lot of slow grinding, sideways movement, then interjected with a few spurts here and there.
Thursday had 2 winning trades between 7 and 8 p.m., but I don't know anyone who could sit through like that grind. I sat through a couple of hours of grind and then gave up, so I didn't get to that spot. So,
and yesterday was a public holiday in the UK, I think. So I didn't trade yesterday. I had a look at the first hour, but it was just not doing anything. So
look,
first
it's
2
all
hours actually I sat through. Yeah.
To me, it's all grist for the mill. Like I'm kind of enjoying getting that feeling of dialed into the system, so you can kind of feel it rolling over. Like it's not a negative edge yet, but it's like, you know, you can kind of feel this is just a bit past its peak, you know?
What a good week to start on real account.
Sorry?
What a good week to start on real account.
Oh, no. This would be a terrible week to start on a real account.
Yeah, this is what I'm doing.
Just keep it really small, man. Just keep it really small this week.
Yeah, I'm at 0.5 risk.
I mean, we've been 50 hours straight up. Like that's an extraordinary run. Like,
Scott, the other thing to keep in mind is the big number fight, 120, which is a very, very important number. So there might be a bit of a fight between the Bulls and the Bears at this level.
that's a very good point. Let me just take a bit of a look at the daily chart. Well, it's going to get there, isn't it? Like it's going to tag it. Like it has to tag it. It would be pretty unusual for it not to even try. And what are we looking like on 1 hour? Well, maybe it doesn't. Maybe it's just gone as high as it wants. Retest variation. Yeah, you're right. It's an overextended market at the top of its thing. Okay, so we have another setup here, and we're 1 minute and 20 seconds away. The high is 70. The entry is 78, and the stop is 72. So that's 76.6. So that's
DV mode, by the way.
shit. Thank you, man. That was retarded of me.
But it might tick up in second.
Oh, okay, so the setup's off the table, but it might go into. It hasn't gone into DV mode yet, but it might. Hasn't.
Yeah, it just came out now.
Well, no, technically it never went in because it can only go in at the close of the bar, right? So an intrabar doesn't. An intrabar doesn't throw it in.
Yeah.
Yeah, I think you're right. It looks a bit like rejection of that big number, right? All right, I'm going to have another shot at this. That's an ass puckering setup to take if it triggers. Yeah. So there's a possibility this is a setup. It's going to be super tight range. It'll be a 3 for 3.5. Still a fair way to go though. So a hammer candle or a lower close would make this a setup. So it's unlikely to be a setup, but you should prep the order anyway, because with 40 seconds to go, it could get up and surprise you. So the parameters would be entry 69.5, stop loss 64.5. Wow. So that's 5. Not going to be a setup here. Okay. So this may be an order. Rep it anyway. So the entry would be 68 and the stop loss would be 60. Sorry, the entry would be 70.5 and the stop loss would be 64.5. So that would be 6 for 6.5. And that looks like in a minute's time, that's probably going to be an entry. So you whack it into whatever position size calculator you use. Okay. 20 seconds to go. This looks like being a setup. Get all your shit correct. Get your orders placed. And 5 seconds, 4 seconds, 3 seconds, 2 seconds, placing order and placed. Now, if this doesn't fill and it stays like this until the end of the thing, we'd have to adjust our order down from 70.5 entry to 69.5. So that would necessitate a change of position size and new order. But your priority is to make sure the old order stays on. So here, in this situation, now it's gone up a bit, I would just drag my existing order down. I wouldn't fuck with it. So what I would mean is just like actually get the mouse over it and drag the order down on your chart trade.
North Korea does.
Okay, 5 seconds, have to readjust the order. So let me check my order. It's 4.5, it's 5 to 5.5. So you can see this one's going to be a quick winner. I'm just going to go grab a snack while this trade's on. I don't want to get fatigued by watching it.
Morning, Scott.
Hey, Chris, how are you, buddy?
Good, thanks.
Yeah, nice. I keep having bad premonitions about like how shit it's going to be this week, and like I want to trade this week. I only want the good times. I only want to go outside when it's sunny. I don't want the rain. It's turning me into whiny little bitch about this.
Yeah. Covering all your bases, huh?
No, just being a whiny little bitch about it. So,
All right, go get your snack.
right. Hey guys, Eric's asked a question, which is a really good question. For each order, we need to calculate the position sizing. Technically, yes, but I'm a lazy fat fuck and I don't do it every time. My priority is to make sure that the order gets on. So if there's any chance at all that I'm going to have a situation where I fucked up and like I've cancelled one order and haven't got time to put the next order on, and I have to work it as a limit instead of a stop limit. If there's any chance of that, because those suck, I'll just accept a bad position size and just drag the order down. So if you doubt your ability to replace the order with a new correct order, just use the old order and adjust it once it's on. So Thomas, I'm curious how it's feeling with you, like 1 hour down for the day, and are you worried about being 2 hour down in such a short, like, are you feeling this at all, or is it just bouncing off?
Actually, yesterday I was already 2 hours down, so
Mhm.
the pressure kind of relief from yesterday.
Okay.
Yesterday was a bit tough at the beginning, but I kind of let go and say, well, you know what? If I blow up my account, I will. But I know the system is not a system that blow accounts, so
Yeah. It's
let go of it.
it's almost impossible to blow up an account unless you start doing stupid shit. So like, just stay the course.
Yeah. So even if it's a bit tough to start with 3 trade in a row losers, okay, that's happened.
I mean, Scott, you have scared me shitless with your emails lately, to be fair.
Yeah.
It's
Yeah.
like, I'm waiting
Like
for
that,
you
like
to
that.
say.
Like karma is such a bitch in trading. Like,
Yeah.
Well, Chris, it was because of you I didn't trade yesterday.
Oh, really? Why is that?
Because you mentioned there was a public holiday in the UK, a bank holiday.
Exactly.
And it played out. I
liquidity
actually sat
dries
down
up.
for the first couple of hours and it was just grindingly painful.
Yeah,
So-
I mean, I looked at the charts yesterday and the bars were very small, weren't they? And liquidity just dries up when there's a UK bank holiday.
So it was good to know. It was I don't know if it's right or wrong, so you can block your ears on this one, Scott. But it was just validation. You know what I mean? You just
Yeah,
for
I
the
get
first 2 hours,
and
and then went. You know what? I'll go and spend some family time tonight and come back tomorrow.
Actually, Scott, I had something on this trade. When I see that my stop limit was not filled, and you said that is going to be a quick winner, I said to myself, okay, I'm going to take only the losers and leave out the winners.
Did anyone notice as soon as Scott said it's going to be a quick winner, it
It
reversed?
just totally reversed. That was the top tick, right? That was the exact top tick. I'll just walk away because it's going to win. Look how easy it is. Yeah.
It's amazing how our minds play games because I go like, Scott, don't say that, don't say that. But
Don't say that. Yeah.
it doesn't, how can that affect anything? You know what I mean?
Well, if it wasn't for bad luck, I'd have no luck at all. So. But there's a lot for us to learn out of this stage, right? Like anyone can do it while you just clock on every day and make 3 or 4 hour, and then oh look, another 3 from 4 day. Oh look, 10 days in a row. Oh look.
Yeah.
Not everyone can do days when it's hard. Not everyone can be 3 hour down and hold it down and get back to be 1 hour down for the day. Like not everyone.
Yeah.
Not everyone's cut out for that.
A 3 hour down, if you're trading error free, is different to 3 hour down if you've made mistakes.
Very, very different. 3 hour down on mistakes, you got to be turning the computer off.
Yeah.
Because you a 5 hour down, like for sure.
Even notoriously, the first morning after bank holiday is like quite slow for the bankers to wake up.
So what I might do is show you. I think Chris and I have done it before, but I might show the rest of you guys a Vipassana exercise that I do sometimes while I'm trading. If I think that I'm going to get bad feelings or unpleasant feelings. You've done it before with me, Chris, haven't you? We've done some kind of Vipassana stuff with this.
You have indeed.
All right. So what I'm going to do is I'm going to rate my level of anxiety on a scale of 0, which is a complete absence of anxiety, like a total flow state, and 5 is unbearable anxiety. I can't deal with another second of this. So by its very nature, most of us, most of the time, are going to be like a low level 2 or 3 grade anxiety, and sometimes more. And what I want you to do is just turn your internal spotlight on that and give it a number from 1 to 5, and and I'm anxiety 4. What about you, Chris?
Yeah, I'd say I am as well, you know, and it varies as I'm watching the bars go up and down. It just keeps changing.
And it varies as you turn the spotlight on it, right?
Exactly.
Thomas, what would you say you are?
Me, good question. Because I don't acknowledge usually my feeling. I
So
don't
you,
know. I'm always anxious, but I never really acknowledge it.
so it's ultimately ignoring your feelings while trading and just following the rules. It sounds good in theory, but it tends to create problems long term. So it's usually best to like kind of acknowledge that, you know, unless you're really an abnormal person, like an actual psychopath, you're going to have feelings like this. That's just the game. And so the game is not to desensitize. The game is not to deny them, but to really desensitize them to them, so that they lose their power to hurt you. It's like, oh, it's just mildly unpleasant, but it becomes interesting rather than something that you have to pull your stop loss away, or something that you want to bend the rules, or something that, and at your guys' level of trading, being affected by feelings doesn't come out with like doing the stupid shit, like you're not going to put on a discretionary trade or double your position size or do anything like that. It manifests as mistakes. It manifests as little small mistakes, like not noticing a trade that you were subconsciously scared to place. It comes out as weird stuff that's kind of hard to gauge.
Yeah, you're probably right.
So
yeah, I definitely feel a level of tenseness when I'm in a trade, but it's less when I walk away from the monitor, and it's definitely heightened when I'm in front.
So let's do an experiment. I'm just going to bounce back with you. Just say just the number, Chris. So out of 5, what's the number?
4.
3. Chris?
3.
Just bounce. 4.
3.
3.
3.
2.
2.
2.
3.
2.
3.
4.
3.
3.
4.
3.
3.
3. You see how it's kind of a weird feedback loop that's kind of hard to, it's like slippery, like you've sort of got an influence on it, but hardly.
This comes from a book, The Way of a Superior Man, no?
It comes from a Buddhist teacher called Kenneth Falk, and it's a variation on a Burmese Vipassana exercise, which is
5.
yeah. So it's something they do in monasteries here, actually, in Thailand, but. Yeah, what I find for trading is that by turning the spotlight on my emotions, they lose their power to make me do stupid shit. So it just seems to be very valuable to be able to turn the spotlight on it instead of just suffer it out.
Oh, you're probably right. Now this is something I need to work on.
It's interesting. I'll point you at a YouTube channel. I'll point you guys at a YouTube channel with some of my friends in it.
Yeah, by focusing on that, you definitely feel a little bit different.
It's not like you can just force it down. Like you can kind of like ease it back off the ledge, you know? It's like,
yeah. I mean, to be really in touch and be able to go like rated 1 to 5 is quite hard. I find it's almost like
It's slippery.
almost yes and no. But I guess that, you know, over time, you kind of practice more, right?
Well,
Better at understanding how you feel.
well, nothing is really yes and no, is it? Like,
No.
And if it was like that, that would be an interesting
Yeah.
that would be an interesting way to look at the human experience. Like is love a yes or no, or does it come up as anger a yes or no? I don't think anger is. I think anger feels very graduated, you know,
Mhm.
and all the way from irritation through disgust through and so all these trading emotions, which aren't completely dissimilar, like they all come from the same fucking place, right? Like trading emotions all come from the fact that your lizard brain thinks that you're being chased by a saber-toothed tiger across the Serengeti, right? Like this feels like no one's going to miss the $100 or $500 that I just made, or celebrate if they actually made it. But like to my subconscious, it like feels important in contrary to all rational evidence, right?
Exactly. Yeah. Yeah. Yeah.
Boom, target achieved.
Lovely. That was a tense one.
Yes, yeah, I felt it.
Like it was going to take us out there at 3:34.
Indeed. I thought it was done.
Yeah.
I thought I'd killed it with my, this is going to be an easy trade. Quick winner.
Yes, you have great influence over the market, Scott.
Yeah, I control that shit.
On the real account.
All right. So what would be ideal, obviously, is if we yank it and bank it off here. We've got the confirming evidence down on the 5, down on the 10, and a upper Bollinger Touch here would obviously be top of the tree. So Jason, you're watching this for the first time. He's just joined the Platinum Group. The confirming evidence types are not all created equal. They behave fundamentally differently. If you imagine the 5 minute is going down, the 10 minute is going down, and the 2 minute we're going down when we hit this trade here. So this trade here is by definition a hard thing to get. Like you're picking the exact bottom of the market within a couple of pips and riding it up to here. Like that is a fucking hard thing to do. In comparison, watching this bounce run out of steam and tag up here and then conform to the 5 minute and the weight of the higher time frame selling, that's a much higher probability. So this trade that may or may not set up now is objectively a much better trade than the one that we just took.
Well, I did see on the 5 minute there, I thought you had hopes of getting it because to me it looked like a downtrend on the 5 just from my experience in the 10. So you did well.
Yeah, it's counterintuitive, right?
Yeah, it's good. Yeah, it's good. It worked, so that's good.
It worked once. That's not the same thing.
I've seen your stats, mate. She's worked a few more times than once.
Yeah, it works fine, but it works fine. But we like to kind of keep it real and like
Yeah.
it's just honestly, it's just been going through a really good period the last couple of months, and yeah, I've never seen a system perform so well as any system in the last couple of months, and you know, all things have a season.
Is it true that when people talk about market makers and shit, when they start seeing people making money or off strategies, they start targeting it? That's not. Is that?
Mate, I'm an ex-con, ex-drug addict. I've never sat within. I've never walked within 20 meters of a bank trading floor. They wouldn't fucking tell me. How would I know?
Right.
Like, I'm the last guy in the world to actually know that stuff.
Yeah.
But my friends who actually have worked in those jobs say that no, it's not like that.
Okay, cool.
There's a little bit of minor collusion with people, and mostly what goes on there is they front run their own clients' orders. So if a guy gets an order from a big investment bank to sell 20 million euros this morning, then he might jump in front of them and get himself in his client's
Yep.
position and make a bit of money by ripping his clients off. That's the worst that happens.
Okay,
It's not
good.
even that bad.
They can see market depth, right? They can see where some of the big orders are sitting,
Yeah,
right?
so can you.
Yeah.
That's not a very difficult thing to find out if you set your mind to it. Like there's higher level FX brokers that'll give that to you if you ask for it. And you can see approximates of it in the futures market, like because the futures and the cash market are heavily arbitraged, and the futures market is totally transparent, right? So, yeah, I mean, it's not something I've ever explored, but
So the systems are going to stay. Yeah, I mean, nothing's going to happen to it. It's going to keep going the same way it is, as far as you can see.
we might. One thing I'd like to do is I think there's some. I think some trades can have an extended target and have a. I think we can tweak it to occasionally go for a 2 or a 3 bagger win. I think that would make a big difference to the stats. I'm by my nature cautious about and incremental about changes to trading systems. I want a lot of evidence before I change. So yeah, there's a couple of changes. I'd like to make the high and tight definition slightly better. I think we can improve there. I think all of us working together makes it easier. So we have a potential setup here. We have a tag of the upper band. We have a lower close. If we get a higher close after this one closes in 3, 2, 1, and bam. Oh, was that a lower close? So the close here was 973 and the close is 974. So we haven't got a lower close. So we need either a shooting star or a lower close than a higher close. Either will do. Now, I want you to notice something. The range of this bar is slightly bigger than the range of this bar. And the ranges keep getting smaller up to here. So what that's telling us is the market is running out of puff. And just in case this is a shooting star, I'm going to prep them all. Okay, this should be this could be a shooting star, so it's worth prepping 3 for 3.5. Okay, that's going to be a really big position size if it triggers.
So even though we're going to DV mode, yeah, we ignore it because we're trending down 5 and 10.
Exactly so. Nice catch, Chris. Okay, have we broken the high there? We have.
We weren't quite in DV mode yet because it's not trending first. But if we did, yeah, then we would ignore it for now.
And you can see why we'd ignore it too, right? Like,
yeah,
this is not the place to not want to be taking short setups. In fact, any short setup here is one that I'm, all over.
Is this the type of a setup, Scott, that you think that at some point down the track you'd say, well, maybe you'd go for a 1.5R or potentially a 2R target or something like that? Because these are lovely setups.
I'm currently testing exactly that and a couple of different things. I'm testing a target at the old lows. I'm testing a target at the at the opposite Bollinger at time of the Bollinger setup. And I'm testing a certain target, then a trailing stop. So I think there's an opportunity to take at least 3R and potentially 5R every now and again.
Yeah.
I think it'll lower the win rate to 42 to 45%, but I think it might be worth it.
I've been running a theory through with Daniel as well, that my son Daniel, and this is not based on any scientific checking yet or anything, but the first mean reversion trade setup in a trend seems to be the ones that don't work.
Yes.
But I'd like to check that out. I've seen it time and time again now.
I've got a little thing I've got a thing buzzing in my head that the first one of the day is always shitty. Like, I don't know why. It's completely not based on any kind of rationality. Okay,
I had that exact same thought, and I went back a couple of months, and it's just in your head. It's not factual.
Is it? I was afraid to check.
Is that why you stay away from the first hour, Scott?
Yes.
I thought I could eliminate this completely. So, Scott, if you're looking at maybe modifying sort of targets and things like that potentially, that will still be, you'd look at it completely rules-based, right?
It has to be rules-based. I think we've universally proven that we suck the other way. And to go back to discretionary trading now, to me, feels like kind of a betrayal of who we are and what we've accomplished. And, you know, why are we finally getting good results? I think we're finally getting good results because we're all doing the same fucking thing, and all, you know, catching each other out when we fall short, and all like really contributing to it. Like, and at the heart of that is having rules that we can all do the same thing. So it's not like, oh yeah, I can see why you think that, but I'm going to do this. It's like having us all do the same thing is a tremendous value, and I really don't want to get away from that.
Has anybody analyzed the losers in the system to see if there's any sort of commonality that to eliminate the?
So there's a couple of theories going around between people. One theory is that if you're in Bollinger Walk mode, you shouldn't take that as confirming evidence for a Bollinger reversal in the other direction. Another theory is that when the market's trending on all three timeframes, you shouldn't be taking reversals. On the ES, ranges below 1.75 ticks are a negative edge.
Right.
And the ES has substantial directional bias, so it can probably be improved with a trend filter. But by that, I mean that when it's trending up, you trade longs only, and when it's trending down, you trade shorts.
But you'd expect that on an index type of pair, wouldn't you?
Well, yeah, I expect it, but I'm surprised how big the differences are.
Really?
I'm surprised how different. I mean, the ES performance long only is just out of control, even better than the Euro USD, if you can fucking believe it. Like, it's like actually better than the Euro, and the Euro's amazing. But on the short side, it sucks right now.
Scott, as you know, I'm working my way through a back test on 6E at the moment.
Mm-hmm.
I'm about 140, 150 trades in, and one little anomaly that I've picked up is that I'm actually got a negative edge with the retest concept. And I've figured out that a retest concept counter trend in 6E at least. You get a few more retest concepts in 6E, it has to be said. But it has a tendency to fail if it's counter trend. So I'm going to go back and drill down a bit further on that. Because I love the retest variation, the concept of the retest.
I think the concept was underperformed. Let me pull some stats. Let me show you the numbers on ES, and I'll show you Ralph's numbers on ES.
And Anthony, 6E is which one?
Well, that's the Euro
Right.
USD, but in the futures contract. So
Okay.
I've got an account with Dorman for futures trading, but I've also set up an Interactive Brokers account. But I didn't set my account, or I didn't tick the right box, or whatever. But they're not allowing me to trade on margin with it. I've got about 20 grand Australian sitting in the account, and they still haven't got it sorted for me. But I actually quite like 6E.
Yeah.
So I've decided, well, I'll go back and do a
Futures
back
markets
test.
are much easier to trade in a physical sense. Like it's easier to press the buttons. It's easier to do the position sizing. It's like it's something that you can get a much better mental grasp of the whole thing. So these are the ES numbers. RTC is holding at 59%. There's longs and shorts. Where is that?
Just be, okay, I was going to say, Scott, just be aware of possible setup happening, but doesn't look like it anymore. Well,
Okay, so we've got to be aware of if we tag this upper Bollinger, we're no longer trending up, right?
On the 5.
which means we could go into DB mode, basically.
Yeah, exactly. So sorry.
So Anthony, did they set you up on Dorman as a professional trader then? Is that the reason?
No, I don't believe so. I've just the process with Dorman was just really simple and easy, and interactive. I've got to call them up again and just try and get it sorted. The last guy I spoke to was really helpful, but that was not the Friday, just go on the one before, and they still haven't activated. They just easily
Is that
said,
through
"Oh,
TraderVate then?
what's that?"
Is that through TraderVate as the broker?
No, Interactive Brokers.
Okay, no, because I set up my a TraderVate account, which is, I think that's under Dorman as well.
Oh, okay.
Yeah. But they set me up as a pro trader first, and it was also kind of all sorts of crazy charges for being a pro trader. I had to tell them I'm not.
Yeah.
But that'd be interesting because I don't trade I only set myself up for the ES micros. So
Right.
I don't really trade it.
So look in comparison to how the 6E looks. Sorry. So you can see it's similar, but not exactly the same, right? This is a bit delayed. This is like 10-minute delayed. I don't pay for futures data in here. So it's similar. In some ways, it's cleaner. In some ways, it's weirder.
It does mirror it really well. Like all the Bollinger touch times marry up, and normally the trigger times are pretty constant as well. The only anomalies really are,
I find sometimes a trade that moves to the target very quickly can move to the target slower on futures. It can lag a bit. That's something I've noticed a couple of times is when I was trading it that it had already cashed out on cash, but not got there on futures. I noticed some minimum viable R anomalies when the thing was really at very low volatility, like the 6E position size would be 2.5, and the cash size would be 1.5 or something. So not deal breaker stuff, just interesting anomalies kind of thing.
So we've touched on the 5 now, haven't we?
Oh, yes, we have. Good point. So when did we touch on the 5? That's the question. So the Bollinger was 441. Okay, so it hit in that last bar. So we can't be in decreasing vol by definition, but if we get another up close on a downtick in volatility, we're in decreasing vol. I don't think we're going to get that.
So you're saying we can still take a mean reversion setup?
Absolutely.
Okay.
And a beautiful mean reversion setup too. Higher time frame, counter
Hey,
trend.
John, it's hit that dollar 1.2. Oh, well, it has it has on 6E.
It's on 6E.
The top of that candle, the 356 candle, to the tick went straight to 1.2
Wow. It's amazing how often it happens, right?
and is rejected.
This is going to be a really nice setup, guys.
Yeah, if you scroll left, you can see it's like hit a previous
wall.
highs.
Yeah, it's hit these, it's these. Oh yeah, that's lovely. Okay, so it's time to switch on and just pay attention. And pretty soon I'll start prepping an order, like just in case if we get a higher close, we've got touch of the Bollinger lower close, higher close. So I'll prep an order just in case and be ready to adjust it. So the low here is 90 and the high here is 97. So it would be 7 for 7.5 pips.
You do 7 for 7.5 or 7 for 8?
7 multiplied by 1.1 is 7.7, rounded up or down to the nearest half pip. 7.2 is closer to 7.5 than 8. So
7.7.
7.7 is closer to 7.7 is closer to 7.5 than 7.8.
7.5, yeah. Okay.
Of course, it's no longer that. Of course, it's no longer that at all. The low here is 84.5 and the stop loss is 97. Wow, that's huge. I'm not going to prep that order.
So, Scott, you wouldn't classify this as high and tight, even though it's within the 25 bar rule? Got you there? Hello?
So the target
sorry,
would be, okay.
Sorry. Yeah, the target would be 68.5, as I said. 83.5, 97 is 13.5 for 15. So 83.5 minus 15 is 68.5, which puts us here. That's okay.
So even though the 5 and 10 aren't trending down, you'd consider this trade.
Well, the 5 is a Bollinger touch. The 10 is trending down. So we have confirming evidence on both timeframes, right?
So you're taking
Actually,
this trade?
That's actually a shooting star, so that order should be on. If you look at it, that's a retest concept.
Yeah, it is.
Yeah, that's Bollinger Touch trending, confirming evidence.
Exactly so.
No, but what I'm saying is target-wise, because it's not trending on both timeframes, normally that would give us the leeway to take a trade like this. I know it meets the 25-bar rule, but it's a long way, right?
It's a long way, but if you think about it, why is and this is a really good question and a good thing to understand, why would we take this one that has such a tremendous distance between the entry and the stop loss before we took this nice tight little one here? Why is this so long? It's because the market has so clearly rejected the thesis that it's going up. So when we got long here, the market still really looked like it was going down for all money, right? Like it really did look like, when we placed that order, it really did look like a shitty trade. Whereas this one, it's much clearer. It's much clearer that that the market has rejected the highs and it's probably going to go lower. So even though we're trading a wider stop, we're trading a wider stop with a higher probability. Now we got a minute and 20 to go, and we're probably going to have to move the stop up to here. That would move it up a half a pip. I wouldn't change the position size to go from 13.5 to 13 pips. I wouldn't bother.
So your entry is 840, right?
Yes, at the new bar.
At the new bar, if we take it, yeah.
And the reason this is a good trade is that hopefully it goes and tests this high before it falls. Like the more energy the bulls put into pushing it up without getting to the old high, the more exhausted the bulls are, and the better entry we get.
Did that take you all in? Yeah?
Yep, in.
Yeah, you're all in, yeah. Okay.
Yep.
Okay. Yeah.
Dad, your anxiety now is probably at 5, right?
Not really, because I don't have to take out a loan to pay the commission. But it is 5.5.
So, Chris, are you there?
Sorry, did someone want me?
No, I was asking if Chris was there.
Abby.
You on the phone?
No. You need me?
Yeah, I'm at the front of the
I love it when you walk away to get a snack and you come back and you're losing trades, looking better. Anyone else feeling pretty fucking pleased with themselves so far?
What do you mean?
I had strong feelings of arrogance and like, oh fuck, winning again, what a surprise, like we do every day. Kind of just idiotic stuff, you know.
Can I talk to you about something that happened yesterday?
Please.
Yeah, so as I told you, I put 10K to start trading on this real account.
Mhm.
But what I didn't remember is that actually I have my gold and silver position on this account. So when I start trading yesterday, I was aiming for 1% of risk per trade. But actually, one trade was a bit tight and my order was rejected. And then I realized that my margin, because of my gold and silver position, was reducing. So
I
actually,
see.
1% was too big. So I had
you
to
should
put.
be-
So this money, I put more money to be able to go up to 1%. But I
Okay,
got
so
another rejected.
my suggestion is to trade small at the start. Like,
Yeah. Yeah,
you know,
that's why actually I went down to 0.5%, which actually saved me
Yeah.
a bit of money. But
this is a long game, man. Like, and you're at a point where you've made an incredible, you've had an incredible series of hard work and good results. It's just better to be very cautious along the way. You know, this is a thing that's going to go on for years for you. Let's get it right from the start. You know, like no fucking around. Let's do everything right, and let's do this.
yeah,
What an exciting time for you. That's really cool, man.
thanks. So yeah, actually, this little mistake actually saved me a few bucks.
Ooh, yeah.
I'm back. What's happened?
We've won.
See that? Lovely.
Lovely.
Wow.
And we have a potential long. And with a candle like that, you should always be thinking reversal, unless that's at the start of a move. But that, after an already 20 pip move, you should already be thinking reversal soon.
Can I ask a question, please, Scott?
Sure.
When's your cutoff time for the strategy?
I keep records up until 8 p.m. US time. But I don't trade. I usually trade 3 or 4 hours a day and then give up.
Yeah. All right. Awesome.
So I mean, today's going pretty well for me. So I might stick it out for 4 hours. I got a roast chicken I want to cook for my wife. So she finishes work at 6. So I'll probably do it at 4:30. So I'll probably trade another hour, maybe another hour and a half from now.
Getting the cheat sheets off Jamie Oliver, eh?
Yeah, exactly. I am. I want to do a nice chicken. It's rainy
So the
season.
Sorry, Scott. The only thing we would need here is obviously confirming evidence on the 5. So we'd need a Bollinger touch.
Hasn't touched on the 5. Nice catch. 61.8 and 62. Man, that's a really good catch. I would have made a mistake.
And it wasn't trending up with a pullback. So yeah, so we would need a touch.
You've got a touch now, boys.
Cool.
Yep. All right. That is interesting, isn't it? All right. So what would an order look like from here with the same highs we've got now? Would be 70.5 with a stop loss of 61.5. So that would be 9 for 10. So 70.5 plus 10 would be 80.5. That would be here. That would be okay, I guess. Prefer it a bit tighter. I'm not expecting anything. It's a bit early to start prepping this order, but this looks like it's going to be a setup. It's going to be 10 for 10.5, which would be 71.5 to 81.5 to here. That would be okay, just. And with just over a minute to go, that looks like it's going to be a setup. Order is all prepped, ready to go. 30 seconds to go. Let's count it down. Oh, it's going to be a different order. Okay, so we've got a problem. We've got 13 seconds and we should technically reassess this order. It's slightly different. But what we shouldn't do that because we might miss the order. We should just accept like a slightly substandard position size. So my entry is 72 instead of 71.5. I've got my position size slightly wrong, but I don't really care. I'll just adjust the target when it comes up. Okay, so with 25 seconds to go, you can see that the high here, 71.6 would mean an entry of 72, and it's the same entry as here, so we don't have to do anything at the bar close. Okay, so should be prepping a new order here. Probably no need to prep a new order, actually. Okay, in.
Yeah, so I like I say, I was busy prepping a new one. There was a slightly better entry, but I just couldn't get it on quick enough. So
Yeah, and you shouldn't actually try it. Just fucks with your head when you try and beat the clock. Like it's just
yeah. So technically not a mistake, or technically is a mistake, but not really.
I don't call that a mistake. I make a conscious choice to do it that way because what's my priority is getting my winning is being there when the market does what we think it's going to do. Like, so I need to have the order on. Which is more important, getting the order right or getting the order on? It's better to have it on. It was close enough.
Yeah.
And what's more important is that you have a structure for handling that the same way every time. So you don't have to actually just like make the calculation. Oh, how much am I risking? What am I doing? How is this special situation? You just have a formula. No, the priority is to get it on. If I can't get it on, I'll just leave it and fuck it.
Yeah. And just bear in mind that the baseline could vary slightly from real life trading.
Yeah. but in a position sizing sense, what you might be up or down 0.1 of an R on any random trade. That's all going to even itself out in the wash. You know, because you could just as easily be taking a smaller position size on a loser than a bigger position size on a winner. Like, you know, our win rate's only 60%. Like, we're not batting 1,000 here. Like, the odds difference really is very small when you think about it.
Yeah.
So, Chris, you've been trading the system longest out of anyone in the room. Did you start trading in sim and then move to live money?
No, I started with so I did the incubator course with Scott. So we spent many months together, several times a week, back testing, checking my results.
We spent a lot of time together, right? Like,
sorry?
We spent a lot of time together. Like whenever I was trading, we were just bullshitting it almost every day. Exactly.
So I went through that process. So by the time I didn't feel I needed to start on a sim account at all. And remember, my background is like,
you've probably done hundreds of hours with me live.
Exactly. And my background is, you know, I've been trading for 4 or 5 years, never ever profitably, jumping from one. I was the classic sort of, when Scott talks about jumping from one discretionary system to another, never finding the right thing, having moments of being really good, but then having more moments of being really bad. I was that, I really was that trader. And so I've been with Scott for like 2 years and basically following and still didn't quite find a system because I'm not really a capital growth type system trader. So I just went straight into trading live and just increased my R value. And for what it's worth, if anybody wants to know, and my son's on the call and he can vouch for me. So I've never, ever taken profit out of a trading account because I've always had another job. So it was never really, that serious. And like I said, I never, ever had a system really until this came along. And so I can tell you that this month was the very first month I took a proper salary out of my trading account from profit ever.
Oh, fucking hell, yes.
Major milestone.
Wow. Fuck yeah.
Right. Yeah.
Dude, I've got tears in my eyes. That's
brilliant, mate.
Yeah, well done, Chris. Your shout, mate.
Cheers, mate. Thank you.
No, that is really brilliant. What did you find? Like I've just started trading it for live money now, and had a decent week last week, 4R or 4.4R or something like that. Any tips for the younger players amongst us?
Wow. Well, all I can say is when I started trading the system, when I increased my R value to a position where it was going to give me a salary, I went straight into drawdown, and I went like about, what was it? It's got about 8-9 R down or something like that, really quickly.
Yeah. And,
but I'd been through months of testing the system with Scott through the baseline, and I just knew it had to turn around or the system was broken. And Scott kept saying the system's not broken. He knows what a broken system looks like. And I just believed in it. And the thing is, you've got to find your own sort of rhythm. I personally don't like to start trading at 7 o'clock in the morning. I find the spreads are a little bit too wide, but that took me my own time to get there. So I sort of trade from 8 in the morning UK time, which is 3 in the morning US, right? And things like that. But it's really just trusting the system and not trying to bend the rules at all. And I can also tell you, teaching my son how to trade and getting him up to speed has actually made me a better trader because he's really sharp. And he's a newbie. Like, he knows nothing about the wider markets trading. He just only knows this system.
What's amazing is that he's going to be better than both of us within just a really short period of time. Like youth is wasted on the young. Like, he's going to be every bit as good as us within 2 months, right?
Well, exactly. Young brains, they kind of like, fearless. They do, but he's learned to follow the rules.
And he's never done it. He's never done it wrong. Like there's this. idea in the accepted conventional wisdom in trading is you're supposed to go lose a shit ton of money. You're supposed to get scammed by gurus. You're supposed to like spend years learning stupid Elliott wave and all this other, and you're just supposed to like have this series of incredible, awful experiences that are just supposed to be character building. And they're not. All they are is just traumatizing. Like, it's just like touching a stove every day for years and years and years. Like, you know, if you don't need to touch a stove to know that it's hot. Like,
exactly. And there's part of me that thinks, oh no, he needs to go through that. But actually,
no,
does he?
It's
No,
it's like saying your kid needs to be sent to Syria because he's never experienced, he's had it too easy. He needs to toughen up a bit. Like, of course he doesn't need to go to Syria. There's nothing there that's good. You know, there's nothing good about the conventional wisdom of just learn some technical analysis and take your life savings and watch it all dwindle slowly down to nothing with the death of 1,000 cuts. There's nothing character building about that. It's just fucking awful in every possible way. And every manifestation of that is all the worst things you can experience.
Anthony, going back, it's Daniel, by the way, Chris's son. Going back to your question, you asked my dad any tips or advice. Well, I know it's a bit of a cliche to say, but like genuinely, when my dad first started teaching me, it was like he was umming and ahhing about every single trade, like high and tight, this, that, and the other, and like every trade, and he was like, "Oh, I should have been in that trade. Oh, I shouldn't have been in that trade." But I know it's a cliche, but you just follow the rules, follow the system rules, and genuinely, like you'll honestly you'll come out, you'll feel a lot better and a lot less stressed about it. And my dad's, I think maybe a month or two ago, said, look, he was over all that, and now he's just going to follow the system, follow the rules, trust himself, trust the system, and that's how it's going to be from now on. And I think since then, that's when things have kind of been a lot better. So that's just from my perspective anyway.
No, it's good advice, absolutely.
Exactly, because like I was, like teaching him, I like felt like, oh, it's got to work. It's got to, if it bombs out, what's he going to think of me? And, all that sort of stuff. And, and there was that sort of fear that it's got to work and wanting to only take the very best trades and that. And that all just fell by the wayside through him, actually, by saying, Dad, we've got to take this trade. This is a good trade. This is, he wasn't, he wasn't fussed about high and tight. And
that's super interesting, man, because when I started system trading properly, I had Daniel with me right from the start. And really, truthfully, it was only the fact that I was paying him like an actual wage, and the deal we did was he was penalized based on making mistakes. He was paid according to his mistake rate. And it was the only thing stopping me from making mistakes was that I didn't want to own up to them to him. And he didn't want to make mistakes because it cost him money. And I was a prick about it. Yeah. It was just being held accountable, had some sort of magic to it. Really interesting that you would say that.
Yeah.
So how is it now? Is it a groove? Are you into a groove? Chris?
Who are you asking that question? Me or my dad?
Both of you. You into like a regular groove now? Like, tell me how it feels to do this every day. Like,
well, I've just come back from a 3-week holiday in Marbella in Spain, so I'm not quite. I wasn't quite in the groove, but to be fair, I was literally taking the laptop around the pool and sitting around the pool and just keeping an eye, and because I feel like I'm at a point where I don't have to focus 100% fully all the time to be able to see a setup and see confirming evidence and quickly, input a trade. So I was just kind of chilling around the pool and placing it. So, but today is kind of the real first day where I
can't do that. I need to have total focus. If you've got that much spare brain power, you should maybe consider adding an extra instrument, like adding an index or adding a bond or gold or crude. It seems like you've got the mental headroom to video game it and trade 2 or 3 at a time.
Yeah, well, that's what I've been talking to my dad about, because I said to him, I was like, I want another index, like you said, to trade, but
So I've got someone
I
trading.
just-
I've got someone trading two at a time right now who says that he believes it makes it easier because he's forced to give it absolute concentration, and I can see that. He swears doing two is easier than one, but he's a pretty unusual sort of a guy. Like he's a legitimately elite trader.
I just
see why
don't
you
know enough.
here.
Sorry,
What two does he trade? Obviously Euro USD.
he trades at ES and NQ.
Right. Okay. No,
Which is kind of weird right now because he's actually had a situation where he's been long the Qs and short the ES.
so the only thing I can say about that, I tried to trade two at a time, and I can see why you say like one is quite, you can get distracted because you can get long periods of nothing happen, and then you miss a setup because of that. And whereas if you've got two, you're constantly looking at two. But when it does get busy, it gets really, you've got to really be focused.
I can see how I can see how you could get a time, like an unusual time, where it would be like sometimes you have to like puzzle shit out, like it's a corner case, it's like right on the border of the rules. Like you'd have to be really game tight to do two.
Exactly. And between the two, you could get 6-7 trades in an hour. And trust me, that is like that's a lot of brain power.
It's
and you're prone to make mistakes.
It's a lot of brain power. You'd have to. So I would only start doing that if you could demonstrably prove to yourself that you can stay at absolute focus for 3 or 4 hours a day. And the way that you train your concentration specifically is you put your attention on the chart, and every time you notice that your attention's not on the chart, you bring your attention back to the chart. So you notice you have a thought in your head and you just bring your attention back to the chart. You start feeling your ass under the chair, you just bring your attention back to the chart. Your mind wanders back to the chart, like training a dog, like training a puppy, right? And and you'll see pretty quickly that most of us don't have the concentration to do that. Like,
But
Well, yeah, then Dad,
going back to that advice, what I can say is for me, it really was about starting off with an R value that was really comfortable and incrementally increasing it. Don't go from 10R to 200R in one loop, in one jump and things like that. It was incremental process, and it just made it so much easier.
what would you change if you changed? If you're doing it again, what would you have changed? Because I will say that even though you know the system really well, all this current bunch of guys like Anthony and Tony, and they picked it up much quicker than you and Ralph and your generation.
Yeah.
Do you have any ideas as to why that is? Because I've got a few theories, and what would you change if you did it all again?
I would start with 1,000 R's.
Would you really?
No, I wouldn't. No, that's a joke. What would I change? It's a good question. Let me just think about that a moment.
Because there's a bunch of people on this call who are exactly where you were they're a couple of months behind you. Everything you've learned, everyone on this call except for me has got to know. Like everyone wants to know how you did it. What would you change? How could you improve the process? Like, when did it all click for you? Actually,
remember the process kind of improved, right? We had this incubator really sort of, it was unsustainable for yourself, Scott, to teach everyone like that, right? And that process evolved into something much easier, and people, we could get them up to speed much quicker than it took myself and to go through the process.
So guys who are on the call, the incubator course was my first private course, and Chris was one of my private students. So I used to get on basically every day for a couple of hours while I trade, and I'd just talk about markets and just teach these guys. Like, I just taught them all individually. And I don't necessarily know that it worked better than what you guys have gone. Like, for me, for all the spoon feeding and hand holding that I did, like, you still didn't get there any quicker, right?
Exactly. Well,
Like, I mean, these guys are just as good as us, and they've only been doing it a couple of months. We've been doing it forever, and you know, we're good, but we're not that much better than them.
Yeah, exactly. I also say that you make sure you've got the right tools to back you up with as well, right? Because there's nothing more frustrating than knowing the rules, seeing a setup, and then you don't have the right sort of execution skills. Because that really is the missing piece, right? If you can't execute properly, you know, you're going to really get frustrated. You're going to miss trades. You're going to position yourself wrong, size yourself wrong, and things like that. So just make sure that your execution is not something you forget about, that you have the right tools. If it means, like I use this little thing called Trader on Chart, I still trade on MT4. But the nice thing is it's just got an order panel, not like the MT4 when I bought this little tool that you just put in how much R value you want to risk, your stop loss, your pips, and your entry, and it, you know, does places it all for you. So just make sure whatever execution tool you've got, you're really comfortable with that.
So what would you change?
Well, like I said, in hindsight, I wouldn't have necessarily needed the incubator program, right? I would have gone through, you know, but for me at the time, it probably was the right thing because it really cemented things for me.
Because I don't know about you, but I feel like what we're doing now with these guys in the Platinum Group is superior to the incubator program, right?
Well, live trading together is a massively rewarding and helpful. Absolutely. Just seeing it play out in front of you.
I mean, yeah. I mean, how long's Daniel been trading? Like, and he's objectively as good as us.
6 weeks or something.
6 weeks. Like, fuck. I've been doing this full time since 2007. For fuck's sake, what's wrong with
you? No, he's better than you, Scott.
He is. He probably is. It's.
Yeah.
But my other point is that Ralph, who we all know is an extremely accomplished guy professionally, like he really is a rock star hedge fund, like a rock star within the hedge fund world. He's not picking it up any quicker than you guys. Like you've seen the videos of me trading with him. Like he's pretty good. He's like us. He's no better than you. And here's a guy who trades in multi-billions. Like he's honestly, like he's good, but he's no better than the rest of us. Like it's like, honestly, it's what the thing I'm most proud about this whole situation is that we're all doing the same fucking thing. Finally, you know, we're all singing off the same hymn book. We're all doing the same thing. We're all taking the same trades. We're all getting the same results for good or bad. And fuck it. Let's see how it plays out. I can't turn up here tomorrow and say, you know, guys, I know I talk about system trading all the time, but because I'm such a massive cunt, I thought I'd just go and just blow up my account doing whatever the fuck I want. Like, I can't walk in and say that. Like, how could I look at myself? Like, you know, it just keeps me on track. Like, I have to do it. Like, I'm stuck.
Yeah.
I know from my perspective, I committed to the Platinum side of things because I need that accountability. You know, I need to be that I know every Saturday I'm going to be answering for my actions during the week. And, you know, it's 5 or 10 minutes that you get to talk, but I just, you know, I don't want to rock up to those meetings and come off like a stooge that hasn't done anything or didn't do what he said he was going to do the week before. So I think that's a really powerful thing to be part of.
I think so too. And it's no accident that the guys, like there's guys who are putting in a lot of work in the other group, the free group, but they're not getting the results that you guys are getting, and they're just not. Like I know Jordan and a couple of other guys, like they're working really hard, but they're not getting the results you are. Like it's just night and day. Like having a bit of accountability and knowing that you're going to have to come and show your results spreadsheet to a bunch of other traders at the end of the week, and you're going to have to answer for your mistakes, and you're going to have to do it for real with us at least one day a week. Like there's something to it, man.
Yeah.
I used to own my own business, you in the print and design industry. I did that for 11 years, and that was a prick of a business to be in. But I was in a franchise group, and we had a group of owners. We used to do a thing called a performance group, where we would meet face to face twice a year, and conference call another 2 times a year. And again, that the power of the accountability to each other. It was like we had a group of unreasonable friends. So you know, if somebody said they were going to do something, sure enough, you could bet your ass that next time we got together or we had a conference call, someone in the group would have say, "Oh, how'd you go with that?" And if you had to turn around and say, "Oh yeah, you know, I really didn't get to it because shit got in the way," you just didn't want to do that, you know. So it was again that peer, not pressure. It's just the peer support, I think, which is really valuable.
I think the support's really valuable. I mean, honestly, I'm a much better trader than when I started working with you guys. I don't find this system difficult even in the slightest anymore, and I used to find it really quite challenging. And yeah.
Just to comment on price action, I can't remember a day in the last 3 months that we haven't gone into DV in the first 3 hours of the session.
Yeah.
And today we just haven't. It's amazing.
You're right, John. It tends to, the first 2 hours tend to bop along all right, and then in about hour 3 you hit decreasing vol at some point, don't you?
Yeah. It's just even in the first few hours, you at least pop in and maybe pop out a few minutes later. But today it's just been solid. Scott, can I ask a question?
Yes, you can.
How is your cryptocurrency system testing going?
We're just in the process of pulling in a bunch of data and making sure the data is correct, which is a non-trivial exercise. And we're using a simplified version of the Edge to test, which is just percentage gain over the last 3 months, excluding the most recent 30 days, because markets are mean reverting over the recent 30 days, and momentum has a statistically strong effect over 90 days. So that's the most common starting point, seeing it's the most common values that institutional traders use. So it's probably going to be a bit different in crypto, but it's a starting point. So momentum needs a trend filter, right? Like it's like you build your own index of the universe that you're trading, and if it's trending down, you don't buy any more positions. So even though you're not using stop losses, you're de facto going to go to cash if the market starts falling. So we're starting off with a really simple moving average crossover thing, and if that works, then I'm going to test our trending definition off the system that we're trading now, and try and plug in that as a trending definition. And then I might do some sort of optimization based on the momentum look back period and the exclusion period. So instead of maybe looking back 90 days, excluding the last 30, maybe I'll try 60 in 2 weeks or something like that. And I'll fuck around with that a bit and see if it's getting better or worse, and see if I can make the trend filter a little bit better. And then I might fuck with the position sizing a bit last, and mess with the volatility weighting is the sensible way to do it. But let's say you were volatility weighting a universe that included, say, Ethereum, which is at $425, and you had another coin which is at 10 cents. Even though volatility weighting in theory evens out everything, it means that by definition you're going to have to hold a lot of Ethereum if you're holding in a portfolio. So there's probably some advantage in excluding the larger cap or the larger dollar value coins, like excluding the top 3, like excluding Ethereum, Bitcoin, and Litecoin is probably going to have an improving effect. I don't know. I'm still in the mucking around with it. I want to see the initial data as a very strong edge first, and then I want to see it as an edge without a trend filter, and then go from there.
Mm.
The game with that stuff is because it's so easy to momentum systems are slightly different than building these sort of systems, right? With stop loss, because there's no stop losses. So the problem with building a system with no stop losses is that you can lull yourself into a false sense of security by saying, "Oh, something that's never happened before never will happen," and we all know that that's a fallacy. So you have to approach it from a strong standpoint of every single piece of the puzzle is an edge. So the momentum effect by itself, without even considering entries and exits, has to be an edge. And then you have to break it down every little piece of the puzzle that way.
Yeah. So with cryptos, obviously, historical data that you can trust is a massive issue. How did you get around that?
So we manually looked at each crypto in the universe and chose most of them. Where possible, we used Binance data as far back as we could, but some of them we had to stitch together exchange data from when some of them, like MT Gox, broken exchanges have been so it was a manual process. Is the short answer, and a pain in the ass.
Okay. And what are you
But I don't
looking
want to
to?
include that in the. I don't want to include that in the backtest. I want to use that as sequestered data. If the system is real, I should be able to apply the same system rules to data that I didn't use to build the system, and I should be able to test it on clean data that way, right? Like so what I'm tentatively doing is taking all the Bittrex coins and not using them to build the system. And then if I can apply the whole thing against Bittrex and it's an edge there, then I'll have a lot more confidence. Because Bittrex is a shit exchange. I don't want to trade them now. But previously, they were one of the premier exchanges.
Oh, sounds good.
Guys, I'm going to go prep my roast chicken while this plays out. I'll be back in 10, 15 minutes. Oh, would you look at that? Not a damn thing has happened. Hey, Chris, you still there, man? Chris, you there?
Scott, I had a question on the DV mod. Is the first candle of the trend, the first candle that put us on a trend, can put us also in DV mod?
Sorry. Yes, it can, but there's a catch with it. So check it out. If we touch the lower Bollinger here, we drop into DV here. What throws us out of DV is the lowest ATR value in the trend so far, which by definition is here. So it's incredibly easy to pop straight out of DV. So
Okay.
even though it goes in DV, it's like 90% chance it pops out like right here.
Okay, okay. Thanks.
And if you think about it, you don't want to be in DV here. Like this is not a situation where we're falling away to the downside yet. You still want to take longs, except we're already long.
Scott, sorry, I'm back. Yeah, were you?
Yeah, man. I was just while I was prepping my chicken, I was just thinking about what a big thing it is for you. I'm just so proud of you. I'm so proud of you.
Cheers, mate.
Yeah, what an amazing thing. Like this is a project that's taken years, right?
Absolutely. Yeah, and you know, you can be proud of yourself, obviously, as well. You know.
Yeah, I am. I'm
Yeah.
proud
should
of
be.
trading well right now, and I know how difficult this is. Now, like I've lost money like for years at a stretch, like all of you have. Like, and those days are behind me forever. And yeah, and I think you should be proud of that because it's a fucking difficult thing we're doing right here, right? This is something that 90% of people who sit down at a chair aren't ever going to be able to do.
Exactly. You know, you always get told, oh well, 95% of retail traders, are going
It's
to
not quite
fail
that.
and going to lose money.
It's
Sorry?
about 70% by the numbers which they're required to keep these days, but still it's bad.
Yeah. It's really bad. So, and you think, well, what are my chances then? You know what I mean? Being, but like without the system, I have no doubt I would not be trading anymore.
Oh, I'm hopeless without a system, dude. I mean, I can already feel what it's like trading a bit of discretionary crypto. I like, no, that has to end within pretty quick or I'm going to fuck it up. Like, I mean, because I'm good with reading charts, I picked the turning point and got positioned at the right time and yada, yada. And there's a lot of fat there, but it's a tricky thing to sustain for more than a few months at a time.
Scott, you've probably seen this before, but this is the first time I've ever seen with the system or been in a trade where the stop loss is below the lower Bollinger and the target's above the upper Bollinger.
Yeah, so it's an interesting thing from both perspectives because our stop loss is well protected, and our target we're in a lowest volatility in the session situation, right? So what typically happens after the lowest volatility in the session, which is represented by a pinched Bollinger Band. Bollingers are calculated by the average of the last 20 or 14 or whatever standard deviations, and so it's a measure of volatility. So after low volatility, we should go to a period where these bands are wide apart. See how that pretty reliably plays out. After a period of very low volatility, things start to move, and after a period of squeeze volatility, things start to move. So,
that's a question I was going to ask you, Scott. Actually, so we've when we took this trade, we took it under a certain rule, which was a retracement variation by setup, And then it's gone into this period of sideways movement. Do you think that edge is still there after all this time, or is it just kind of?
I think it's there, but it's there by accident. I
Yeah.
think this is a great trade still. I'm really glad to be in this trade.
Yeah.
I think if you look at both the 5 and the 10 minute, they're both in trading ranges. They're both neither of the 5 nor the 10 are demonstrably trending anymore. So what's the highest probability thing to happen in any given trading range is to tag the top of it, right? Like that's just like trading 101. So
Yeah.
we can reasonably expect to move at least to here, probably to here, at least to here. That, you know, whether or not that happens before it hits our stop, who knows? But
Yeah.
I mean, it's still good. It's still a perfectly fine trade. It's just going to waste a bunch of our time, right?
Mm-hmm.
If I walk away from today 3 from 3, I'm feeling good about my roast chicken.
Don't burn it.
My chicken's looking pretty excellent, actually. It's rainy season over here, so it rains every afternoon, right? And when it rains in a city of 20 million people that floods, you cannot get a taxi. Like you just can't move anywhere in the city. The taxis instantly charge 3 times the rate, and they disappear. And to be at home cooking a roast chicken when no one else can even move outside in the city is wonderful.
Scott, I wanted to come back on the reducing volatility that you were talking about. I know someone that actually trade off the Bollinger that were narrowing down.
Yes,
which
I used to trade that. It's a very strong.
Once it pop off the Bollinger, you take a trade and so on.
There's a very old price action setup called the squeeze play. It was invented by a guy called John Carter, old trader. And what it is he puts a 2-period Bollinger Band with a 2-period Keltner. And when the Keltner channel is inside the Bollinger Band, so the let me start off here. You can see how the let me change that. Let me set this up.
What is this indicator?
It's called the Keltner channel. It's so the edge is X number of bars with the Keltners inside the Bollingers. So you can see that the Keltners inside the Bollingers at the same time hasn't happened in all of this price action except right now. Like you can see here, it is for a little bit, but this one pops back out again. So it really only happens in these Bollinger squeeze play situations. Let me see if I can find one on the screen. Yeah, like here, where the Bollinger Bands are inside the Keltner channel. The old setup is to buy the close on the break or buy just outside, and a stop loss below one of these, and write it up.
And also, what you say on this newsletter you sent this morning, I think, about when you know too much, you tend to mess around with justifying your choices.
Oh yeah.
So the less you know, I mean, the better.
Yeah, I mean, look at Daniel. He is like objectively probably trading better than Chris and I, and he's been trading for 6 weeks, and I've been trading for well over a decade, and after 6 weeks he's better than us because he doesn't know. He hasn't had all this like years of fucking up and like making every type of mistake it's possible to mistake, and making money and losing it, and finally figuring out the systems with a way, and then finally figuring out how to build good systems, which takes a few years to figure out, and you know, and then putting a couple of years, finding one system that's good enough to dedicate yourself to, and put a couple of years into developing out and fleshing it out until it's a real thing. Like, yeah, you don't need to go through all those problems. You just don't. Are we in decreasing vol?
It doesn't matter because we wouldn't take another long trade anyway.
Oh, exactly so.
But in theory, we are in DV.
And we couldn't get confirming evidence for a short trade. So. Are we trending down on the?
We are still trending down on the 10. We're not trending down on the 5 though.
Trending down on the 10 until. Are we going to get a close above, below, above in the next?
Looks like it.
Yeah, it looks like it. But we will have
That
hit
close. That
Look
close
at
above,
that.
below.
Oh, yeah, come on and hit
Scott,
the target.
that close, the close below, above. Doesn't reset if one of the bars touches the Bollinger again, right?
It resets if it makes new lows, which it has, so it resets.
Okay, so yeah, so it wouldn't. Okay, yeah. Wow, that got close.
I'm out, baby. 6E.
You're out. Winner. 3 from 3. He shoots, he scores. What a day. What a thoroughly enjoyable day to be sitting and doing this.
I have to say, one of the rare times in 6E where it actually just kisses the target and actually pays.
Lovely.
Helps that it was only one contract, though, I suppose, because it was such a long target.
So if we had managed to readjust our position, we'd be out this trade now, right? Do you remember early on?
No. I adjusted mine to be correct, so I'm still not.
You still in it?
Yeah, I'm still in it.
Scott, can I be the pest that I am and just pick your brain quickly on 6E?
Of course you can. Do you want me to put it up?
No. It's just a quick philosophical one. So we had a trade earlier today so the last long that we had, I got stopped out because it made an equal low, and because I'm setting the stop at the
low.
Yeah.
So that was the first time that's ever happened, right?
Yeah, it's happened a couple of times through my back testing. So I went back as far as TradingView let me, and I reckon out of 142 trades, it probably happened 4 or 5 times maybe.
So let's look at the exact rate, and let's work out 4 or 5 times out of how many losing trades.
Yeah.
So let's work out the real difference there, and let's work out if you're doing it that way as a sucker play, because you get something and you lose something, right? Like you lose a fraction of win rate, and you get, were there any winners that were just winners because you were in that wouldn't have been winners otherwise? That's the other side of that coin, right?
Yep. And are you perhaps better to give it that breathing room, but only go for a 1R target?
No, I wouldn't do that. I think you're doing it the right way instinctively, but I think you should be collecting the data. I think you should go back, look at everyone and say, okay, are there any of the, let's look at the winning trades and say, was there any time when that extra half a pip just made it winner when it would have been a loser? Because that's you have, and look at, is it 4 or is it 5? Let's look at exactly. And so, okay, if it was 4 and we had 2 back the other way, okay, then we've got something that's a small effect. If it's just straight 4 off the top, then that's probably a big effect, and we need to think about it.
Yep. Yeah, I'll dig a bit deeper.
So it's Jason's first day on the call, and he's only just getting up to speed with the system, so he's not ready to trade live yet. So I think what you've seen today, bro, is that the game is doing things correctly. This is the very opposite of trying to make as much money as you can today. So what we're all very focused on is just following the rules. So
it's amazing what you're all doing. I've not been or involved in anything like this before, and I can just see that it's going to be something that's going to propel me forwards just in leaps and bounds. It's amazing. It's awesome just watching. Yeah.
So the point is that it's not about who's skillful, like who's the best. Like the best is the person who concentrates the best, who gets the most fucks. It's not the guy who can read the charts the best. Like I'm probably not the best trader in our group objectively. I'm one of the best, but I'm probably not the best, and that's the way it should be.
It's like that Ray Dalio video that you put in the thing. Many great minds thinking all together is going to make it easier for all, isn't it?
Yeah, it makes it much easier for me.
Yeah, it's awesome. I reckon it's really good. Thank you, and thank you to everyone else for letting me be a part of it. It's awesome. I'm not going anywhere.
I'm just going to wait and see if it hits this target, and then so it's probably enough for me. 3 from 3 is a good day out, and yeah. Well, I've just jinxed it, of course, but
it'll get there, mate. Not that you care if it does or it doesn't, because in the long run, you're going to get there.
I'm a mountain. I am solid.
Good on you, buddy. Well, that Saturday course too. I've taken not working on Saturdays anymore, so I'll be jumping on those as well too, mate. So that'll be heaps better too.
All right, I'll see you then. See if you can dig into the videos a bit more, and you'll probably have some questions, and we'll address them on Saturday.
Good on you, mate. Thank you so much.
Cheers, man. Bye.
See you, buddy. Bye.
All right, guys, I'm going to go and put my dinner in the oven. I'll come back and see if this trade won, but I wouldn't have thought there'd be much point in anyone sticking around. So thank you very much for today. It's been a really nice day for me, and a special day to hear about Chris pulling money out of his trading account for the first time. That's I remember when I first did that, and that was a big experience for me. Yeah, I think it's important to acknowledge the wins, and fuck yeah, so happy for you, man.
Yeah, man.
Yeah.
Come on. All right. Cheers, guys. Thanks.
See you, man.
Yeah, bye.
Thanks, Scott.